Good morning, everyone. It is January 8th, 2020, and it is right before 8 a.m. Eastern. And we're going to start by reviewing how we're doing so far. So, we've taken a couple of trades. So, yesterday, after the recording, I was sitting at a negative $10. We started with $252. And I put 5% at risk, so take 252 times 0.05. I was allowed $12.6 in losses, which represent 5% of my capital. I set that rule when I started trading, which means I'm going to be around for a while. And as we see, we'd had a rough start, but get used to this. Because you will have losses, but if you manage your risk, you'll be around to regain and take back some of that stuff. So yesterday, as I said, after the video, I was down $10. And then I took two small trades. I took these two. One was 63 cents and one was 95 cents. That put me at $8 negative. And then I had taken another trade yesterday. Bullish buy on pound dollar. And then Iran decided to shoot some missiles, and early this morning we had a spike on pound dollar, and I'm going to show you what happened. I was positive, then we had this little click down here, and I had tightened my stop loss, and it obviously kicked it. I had a 33 pip stop loss or 32 pip stop loss, and it kicked it right there. So I took a loss of $3.29. So overall I'm down $12.36. Considering that my 5% since I started represented $12.60, I'm still below 5%, just shy of 5%. However, now we go into the open trades. This is a trade that's sitting from yesterday. We can see, let's see, when did we take this? It says January 8th. However, this is server time. And if you look here, my server time on this one, I'm going to go down to 1 minute. And if you take a look here, I'm pointing, that ain't gonna help. But look at the bottom here where my crosshair is, and you see a time slot there. It says right now in this 1 minute candle, it says 14:56, which is military time for 2:56. So it's right before 3 o'clock. It's right before 8 a.m. here. So this time here, January 8th at 3:42 a.m. deduct 7 hours and you'll find out when that trade was taken. So it was yesterday. So with Euro USD, USD CHF, we're up $3.59. So we take that away from the 1236, right? 1236 minus the $3.55 we're up, minus 355, minus another $2.73 that we're up, and we're $6. So we're 608 out of 252 divide, actually 608 divided by 252, and our total risk is 2.4%. Not bad, considering we have had losses. We've lost, but we're still in the game, and we're only down $6. And the way things are going right now, we may be able to turn this day and our entire balance into a profit. We'll see. I'm seeing a little rejection here. As you can see, this is a resistance point that got rejected. Little rejection here, here, and acted as a support here, although not very strong. This arrow here indicates when I took the trade last night for USD CHF. And as you can see, I have one position here and I have one position here. This position is in the money, so I can't lose money on this one any longer. I'm setting at $1.44, and I'm gonna move it up, so I'm at 17 pips, $1.80. If this one, if this stop loss gets triggered, it'll give me $1.80. What I can do, since I see this turning, I can decide to go in and take the profit right now, and then see what happens here. That's, profit is profit. There's a chance that this one will come down here, and if it does, I'll put my stop loss right around here. I'll take $2.68. I don't know what the spread is right now because I can't see it. So I'm going to put it right here, 242. We'll see. And it turned red because I'm within 10 pips of the closing price of the previous candles. So it's a chance that this one will close out. That's okay. This one I took this morning. Like I said, I got kicked out on this candle. There was a stop hunt. Got kicked out. The reason why I'm short is that the one thing we're going to talk about today is correlation. We're going to talk about that because if you're trading with a US broker, you're not going to be able to hedge your trades. We can thank these large hedge funds, banks and stuff that had no clue what they were doing and blowing money left and right, and then the politicians got involved into something that they shouldn't be involved. And if you're a trader in US and use a broker in US, unless you have an obscene amount, you're not going to be able to take a hedge trade, which means if you're long on this pair, pound US, and it's going against you, you can hedge by going short, so your losses are getting cut in half. Now, it's a very difficult method because most people will find themselves that they hedge the trade right in the middle, and now that one goes against you, but not far up enough to give you a profit on either side. So now you're sitting with a loss on both sides, and they seem to be stuck in this purgatory hell. There's a different way of hedging, and it has to do with correlation. We're going to take a look at that. So anyway, got stopped out here. I believe that if Trump comes out today, and this is completely not how the market is set up, because the market is set up to be bullish on pound USD. However, with Iran doing their thing and potentially Trump doing something today or announcing something today, that would make America great again, and that would potentially cause a spike down. And so I'm thinking I'm going to cash in on that. Now you see some new things on this screen here, and we're going to get to that. I have an indicator, and I said I don't use indicators, but I use helpful indicators, not anything to tell me about price, but other than the trading sessions. And I also added this other indicator I have here that will tell me the current price, the spread, the high of the day, the low of the day, and when the candle will close. This is an hour time frame, so it says it's got 57 minutes left. The swap long and the swap short, we're not going to touch that. Distance from the 240 moving average, and open trade, the profit or loss. And I'm up 19.6 pips on this one. And some bad colors right now, but we'll fix that. But I'm introducing this, and you will have access to them shortly. I'm trying to get the website ready so you guys can get in there, and you can download these indicators. Some of these indicators are not mine, but I've taken the time to find them, and so I'll make them available. I'll give the credit to the rightful authors on the website. You can also You can also go in and look here down at the bottom. It's called Codebase. And we can open up this. Codebase are indicators, you have ratings, you have the date when they were created, published, and you can scroll through here and find candle close, you can find all kinds of different indicators, you can find EAs, which is basically trading engines that will do the trading for you. I don't use them. I am writing some EAs on my own, and I will release them later this year. And I will even show how they work on live accounts. So I will put my money where my mouth is, so to say. Anyway, in here you can find a lot of different indicators. You can sort them by name, and yeah, all you have to do is you can double click on one, it'll open up a browser window, you can read about the indicator, you can see who the author is, you can see the rating is, it tells you what the indicator does, how to operate it. Some of them show a backtest. This one is a 1 minute scalper, expert for MetaTrader 4. There's two platforms out. One is MetaTrader 4 and MetaTrader 5. MetaTrader 4 is still the most dominant one, but MetaTrader 5 is making progress. So, but here's the backtest. That means they ran this against historical data, and this is how it performed. If we click on this, we had 31,646 bars involved, ticks. Initial deposit 10,000. Total net profit $124, and profit factor 241. That's pretty good. Losses $88 against the 124. So there you go. Seems to be good. Knock yourself out if you want to. But anyway, that's and you can get a free account here. It's mql5.com. And you can log in, register. It's free. Once you're in here, you can search for MT4 indicators, EAs, MT5 indicators, EAs, and some of them charge for it, and you can decide if you want them. Let's see, candle close. Let's see what we find here. Alert twice, 5 minutes before candle close. Here, so go there, try it, knock yourself out. I will have the ones I use on my website once you register. But as I said, I'm trying to do a lot, so I'm learning Camtasia. I'm setting up the software so I can do an online session, which I'm planning on for today if all things go well. So you can see me trade live since this is a recording. So a lot of things going on, so I do apologize. Trying to stick with my New Year's promise, starting when I said I was going to start, so we have. Anyway, back to the grind. So we're up 284 here, 230 there, with two trades, USD. Now, as I said, if Trump announces something, this thing will most likely blow down here, spike out, and it's possible it'll come all the way down here, which would be from current price, roughly 300 pips. It's very possible. It's a consolidation area here. It could be more. During the Trump election, I made a ton of money. I saw 800 pips either way. So things can happen real fast. Now, 2 days ago, I was bullish because that's the pattern. We had a consolidation. We had this zone here where price consolidated, broke out of this zone, came back down on this candle, tested it, and then plunged away. And that made me have a bullish opinion about the market. So we had a higher high, higher low, higher high, and all of a sudden we have a lower low and a lower high and a lower low and a lower high. But now we have a failure. We don't have a lower low. So this is where we could change. And we look left, you see this area here, 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 here. And go out to monthly. There's definitely room to go up. And if you look at the monthly view, and we draw a trend line that become invisible. We'll draw a trend line. I'm going to change this to array. Not there, parameters, it's array. I'm going to make it thicker. You'll see soon why. Alright, so trend line. When you have selected a trend line and you see it's selected, you can hold down Control button on Windows platform. Don't ask me what it is on Mac. Pull it over. It makes a copy. And here's a trading channel. Okay. So price came down, going up. Here's the median price right there. So we can highlight this again, and we can put a bar at the median. That means price lights could come in here, in the middle. So here's a trading channel. Price came down into it, went up to equilibrium, came down to the bottom, went past equilibrium, will come up, went down a little bit, came up to the top of the channel, went back down, hung around equilibrium, came back up to the top, went through the equilibrium, came back up, and then back down to the bottom. And so therefore, on a monthly view, we're bullish. It came up to the resistance here, but it's a very strong move up. So overall, I'm still bullish. I still believe we should be up around here, which is about 700 more pips. And if we take a look at the monthly, we have a double bottom. So we have the W, the first leg of W, the middle of W, second leg created, and off we go. So it's reasonable to believe that over the next couple of months we should be coming up around here. As you see, that's a lot of pips. So I'm still overall bullish on pound USD, but with what's going on right now with Iran and all that stuff, bearish slightly. There's nothing wrong about that. Overall, I'm bullish. Right now, I'm bearish. Just trying to make some money. Equilibrium. Here's my trading channel. I could go from here down to here. What are we looking at? 300 pips, potentially. If for nothing else, 200 pips with a spike if Trump does some announcement today. So you see the extension level here, extension profit level 2. I will also talk about what I did here. And a pin bar here. So a lot of information, I know, guys, but I'll try to spin up a live session today, and you can ask me a lot of questions, and we'll see how it goes. Anyway, so that's why I'm bearish right now. Here's a pivot point for me, and that pivot point was broken, not by extreme power, but did break, and that is also an indication of some change potentially, but it is an area of consolidation. You see the consolidation here, 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 so maybe a few more pips, and then maybe it'll just sit here and waiting for some news. So let's talk about the news. Yesterday I showed you guys the news channel that you can look what's happening, what's going on. You can register here at my FX book. I don't get paid for this. I wish I did, so you guys could support me. Maybe I'll find a way to get an affiliate link. I don't know. It's not important right now. Anyway, here we are. The economic calendar, as we could look at. And in 1 minute, employment change, high news, expect previous 67,000. Consensus is we're going to come in at 160,000. And then in 1 minute or less, we're going to see the change. So what is this? Employment change released by the automatic data processing. Measure data change in the number of employed people in the U.S. Generally speaking, in rise. I do believe that the employment's going to go up, which means dollar will be stronger. However, the way it works in trading is that if it's good numbers, which is good for the dollar, this thing will go backwards first. Remember what I said about the market being fixed? Since the dollar is stronger, there's a reason why you should short pound USD. The dollar is stronger, but you got to wait for it because the market movers are going to create some supply. So they're going to kick out all the stop losses on the short people, like myself. I'm short here. So they're going to try to kick me out. And when they kick me out, that creates a supply that they can use, and they can go short up here instead of down here. So if they go short up here, they make more money down here, right? Makes sense. If they take a trade here, right, and go short down, oh God, take a trade here and go down to here, they make 235 pips versus going short here and only making 130 pips. That's 100 pips. If you're sitting on $10 million, well, it's a lot of money, right? So that's the reason why you have the market makers take stop losses, kicking in stop losses. It'll cost them some money to drive it up, but they'll make that back once they go down. So if it's good news on this, which it was, voila, imagine that. The ground should be shaking, earth should be moving, all that kind of jazz, because it exceeded the consensus. So better than expected result. What's happening? Not a darn thing. There's some bigger news, and that is everyone's waiting for Donald Trump's tweet. Now, I'm up 13 cents, 13 pips, which is the equivalent of $1.43. I'm seeing some hesitation. What I can do is I can just move the stop loss to break even because we could have a spike, and the spike would, in that case, potentially, that's a big ass push. 79 pips. That's way high. And you ask, why can I have 79 pips? That's $77.95 in open risk. Well, I'm trading positive. Overall, I'm not trading positive, but I'm trading positive. So my risk, at risk money right now, is less than the 5%. So what should we do? What should we do? What should we do? Let's take a look at the volume. Volume up, not a whole lot of strength, right? Now here we have a high volume with a low spread, meaning the bottom, the body of the candle is only 7 pips. And the price started over here, went up here, and then down here just to come back up here. There's probably going to be a retracement. You know what? Just to be on the safe side until we see a better sign, we can move the stop loss to break even, or we can just take the money. So right now, let's see if we should cash out. How about, let's look at this candle. Huge volume, but it's a fake out, right? Because look at this candle. Big body, low volume. So you got a big spread here, 13 pips. Here it comes. So if we come up here, we'll get down to 1 minute and see where we're going. So we're looking to see if we're going to have a new high. Here's the resistance. Just a resistance here, as we can see. So we'll see what happens here. But there's another one right here, which would mark the new high. I'm at $1.10. So lower high, lower low, lower high, not lower low. And so there's a consolidation here, right? And then we have a new high, new low, new high, new low, new high. Let's see where this low goes. We might cash this baby out. The other stuff we'll just let sit. I know this is not very exciting because we're talking about so small money, but you gotta try to envision you getting further ahead. So we're getting a higher high potentially, and we might break this high. If we get a close above that high, we'll have a retracement. Next support and next reasonable area of stop losses will be right here. Now we can look at major levels. Major levels are like even numbers, 25, 50, and 60. 50 and 60 is what we call MM levels, market mover levels. So even numbers, where are we here? We're at 3107. So we're hovering around the 31 mark. We see here 3105. So it's a major level, the 31 mark. And the sweet spot is sitting right at 31. So there could be, if you trade, if you hedge, which most hedge funds and big banks and all that stuff do, they move from here. They would trade this candle because it closed over here, and they will go from here to here. There's 16 pips here, and they will stick $1 million in 16 pips. Well, that's a lot of dough. Their stop loss is sitting right here. That has just gotten kicked in by the people that went short here and took 20 pips. They put the stop losses pretty tight right above here. They're now out, and so new supply is being created. So now we're going to see what happens, because now we're right here. So it's reasonable to believe we'll have a short down to here and then potentially a further reverse. We'll wait and see. So we're up at the $1.50 or something, and we're now at 50 cents. Okay, we're going to let this baby breathe, but just nothing unusual here, nothing to be terrified about. We could see a kick up to this level and then continuation down because we had good numbers. We have the Iran crisis and all that kind of stuff. So enough chit chat. Let's talk about the indicators. This is dollar yen. I drew this zone yesterday. It's consolidation zone. We had a false breakout or selling climax, meaning the market movers pushed the price up to test if they could get more money out of the remaining supplies. They got up to here, and then now the warehouse is empty, so now they have to create more supply. So they're going to drive the price down, take out the longs that went long here and thought, ooh, I'm in, I'm buying a new car, I'm quitting my job. And then just to see price coming down here, taking out their stop losses, they called the boss back and said, I'm sorry, I made a mistake. I can't get my job back. And canceling the lease. And market movers went all the way down here, so they have a nice run of 97 pips. So they took the stop losses out of here, of the retail traders. And then they came down here and took the stop losses out of here for the ones that had a bigger stomach. So now they created supply. So now they have more things to sell. So why not drive the price back up again? 108 pips. Not a bad plan. All right, so anyway, and the problem here is that we can't see the price, can't see the spread, and we talked about the brokerage hours on Monday, how the spread will increase and then you should get out or widen your stop losses just to not get taken out. So one of the indicators I use is called session, and session will give you, actually, we're not going to start with session. We're going to start with new market info, and you can find this. So just Google if you want to, or just wait until you can get to my site. But new market info light and new market info dark. The only difference is whether you want a dark theme or a light theme. So here's the light theme. Looks like this, yellow text, this text here. Let's remove that. Let's try the dark theme. Here it is by default. So this would work if your background is, let's say, black. It's great colors, right? And for some people this is good. It's not so hard on your eyes. I prefer not to fall asleep when I'm trading, so I need a color that keeps me awake and is easy on the recording as well. So dark theme doesn't work for me, so I'll go to indicator list. I remove the indicator, done, and I'll plop the light in here. And you can right click anywhere on the chart and go to indicator list, and you get this window here. There's your indicator, new market info light. You can double click on it. You see who the author is. You see the settings here. The only I have is allow external export imports. Here's the settings, and you can change that. So the comment color, this is the comments, like the spread, the day high, day low. You can change that color. You can put any color you want. Let's say we put red, for instance. Now it's red, if that's easier for you to read. Whatever color you like. I can't remember. Spread color, that's the spread color. I like that, it's fine. Then you have the day high. That's the high of today, it's right here. And then you have price down. And that's here, day low. Those colors work for me, so that's fine. Show magnified price. This is the price, it's magnified. The up down shift and the side adjustment, it just has to do with the location of it. If you want this to change, you have to get the source code and do some programming. So that's it. And then you can say what time frames you want to see it in. I have it on all time frames. So that's the first indicator. This is very helpful because what you will see right here, and I'll see right here, it says spread 0.6. That means if the purchase price is $1, I'll pay 0.6 in spread, so I'll actually pay $1.06 for it, right? So that's the spread that the broker is making. So this is the one that you will see at 5 p.m. sharp Eastern. We'll go from 0.6 to 20, 30 pips. So be mindful of that. If you have a stop loss that's sitting 10 pips away, you are going to get kicked. So anyway, first indicator. The next one, which I find is very helpful, is the trading sessions. So you have different trading sessions, right? So you have Sydney and Tokyo, that you could count them as one if you want to, but most people consider Asian market, European market, which is the biggest market, and the New York market. So here is one link, I can send it to you guys. I'll try to put it at the bottom of the video. And so you can see you have the market hours. So you can put an indicator in here to show you blocks of when those sessions are, and they'll be helpful to know what session time are you in. Now, this is based on, I'm in Eastern time, so these times are 6 hours ahead of me. So what I did this morning is I just created a configuration file. So you can load the session time, session set here, and I'll set it. You can change the colors after, whatever you want. But this is what it will look like. Some funky colors. I didn't spend a whole lot of time trying to make it pretty, but let's talk about the colors. So Asian color is light coral. And I think this actually looks, that looks right. And then Euro color is aquamarine, which is this thing, and then US color is dark turquoise. So let's dark turquoise. US hours is 8 a.m. So let's find out if we have this right. Go down to the minute block here, actually 5 minutes. So let's see. This should be 8 plus 6. So we have January. So this one sits at 9, and it's 8:30 now. We're 5 minutes out. We've been trading for 30 minutes on US time, right? Yep. Right here, 8 a.m. Let's put this one here. So it says January 8th at 9 a.m. So this one is obviously not right. So we got to move that because we've only traded for 30 minutes. So this box should pretty much be fixed. So what I'm going to do is I'm going to pause the video, fix this, and then come back so you don't have to sit here and look at me fixing it. So let's see if I got this right. Doesn't seem right. So I'm going to do this. I got to figure out the. All right, I'm back. Apologize about that, but the problem is that Traders Way has a server time that's 7 hours ahead of me. So 8 a.m. when America session starts, it's actually 3 p.m. on their server. And there's nothing I can do about it. And then the other crux with this indicator is that if I would write here US ends, which really then, according to the math, would end at 5 p.m. plus 7, which is midnight. But if I write midnight, the whole thing just shifts right back to the previous day. So it all gets screwed up. So here's the file. I've saved it, and I'm going to share it. The colors, again, you can set them whatever you want to. I put yellow here for US, just to be able to see that this thing was right. I'm going to change it because I don't think yellow is appropriate. It's always difficult with colors, but red, white, and blue, right? But if I take dark blue, you can't see squat diddle. So and then you have the colors mixing a little bit. But anyway, play with it. You'll figure out what works for you. Right now, it's more about showing you this indicator that helps you understand what session you're in. So right now, we're in the European session and the US session. That's what these two indicate. The European session ends at noon, which then, with the server time, is 7 p.m. Tradeaway server time. So if you look at the bottom of the screen, you will see that, because me using my finger pointing at the screen won't help you. Anyway, that's where it. So usually the Asian market, which is this box here, does not move a lot. But we had some big news yesterday. with Iran, and that was during the Asian session. And obviously, um, there was a big move here on dollar yen. So it dropped 81 pips. Now, as you might have seen, a trade disappeared on the screen. That was the trade that was up $2, and we tightened the stop loss. We took $2.40 profit on that one. So overall now we are down $10.02. So what does that put us in comparison to where we started? $10.02 divided by 252. We're at 3.9% that we have lost. That's not bad, and we're sitting on 80 cents here, so it's a little bit less than 3.9%, and hopefully we'll get a trade that will take us up. Slow week, and a lot of holding patterns, especially what's going on. We see here this one came up here, touched the beginning. Looks like we're going to have potentially a drop. This move up was very weak. Didn't create a new high, so it kind of failed. So it's reasonable to believe that this one will drop. So now I have this stop loss sitting all the way up here, which is $6.29. So that's I'm allowed 5% on all open trades. We have $242. 242 times 0.05. So I'm allowed $12 at risk. So I have 6 here, 629 here, and I have dollar Swiss franc. I have another 593. So we're sitting right at the full risk. We can certainly tighten this up if we want to. Again, I believe this could go up. We have to look a little further. You see, that's the arrow I traded on yesterday. We have a railroad track here. This is candle patterns. Quickly, a railroad track is 2 almost identical candles like this, and the last one is indicating the direction of what's happening next. So with a bearish, now we're bullish. So the indication is that we're going to have a bullish move up. And we started having that with a lot of uncertainty in the market, all that kind of jazz. We're not sure yet when that's going to happen, but we still believe it will. If the candles would have been reversed, you had a bullish and a bearish, then that's a railroad track bearish, which is again down. Now overall, we're in a downtrend here on daily, so this won't be perfect, but connecting it like this, zooming out a little bit so we can do a bigger rail, a little bit more, and we have it highlighted, so we hold down control, we move. Here's our trading channel, up, down, equilibrium. So let's find the equilibrium right there. That's the equilibrium. It doesn't have to be in the center of the trading channel. That's just where price seems to be coming up and bouncing off, coming up, bouncing off. So here's a trading channel. You see consolidation. Now when we look back, we see this is August 14th, June, January, and this is 2018, September 2018. So we're pretty much in an all-time low here now that hasn't been seen since 2018, which was over here. But that in itself is an indication that we most likely will be bullish. Could we go down further? Could we come down here? Well, look at the dates. 2018, this is January. We could definitely come down here, but we have to start thinking what happened around that time frame that made the price fall that low. Now we go to monthly. Here is 2015, and here's, everyone knows, the crisis here started, where the dollar really lost value with the housing crisis and slowly working its way up. So if we look at the pattern, higher, higher, stop loss riding out, higher, higher. So trading channel, a flat trading channel here is from here to here. That's the range, right? Range, range. Pretty decent range, 5,000 pips, up and down, up and down, up and down. So anyway, price broke up here through the equilibrium, came down here, didn't make a new low to this, came up here, didn't make a new high, double top. We have the M, up, down, up. We could have a drop down before we have a new, so that's a 4-hour candle setup. Look, 1, 2, 3, higher, so double top here. So this could definitely go down. So since I'm trading where I'm trading, I could hedge my trade if I wanted to, but I'm going to show a different way of hedging. So this will come down. Where will it come down? Probably around here. Will it come down here? It most certainly could. But it's USD, Swiss franc. We're waiting for Donald Trump to open his mouth. Let's see what happens. But we're down $2.97. We'll let this baby sit. But there's your channel. Here's the next support. We'll see what happens. We have a lot of wicks around here, a lot of consolidation, resistance areas. So see coming down here and then bouncing back up. Waiting. Euro USD. We were bullish on it, but things are changing. Here's our trading channel here on daily. Like this. There's your channel. Let's put the equilibrium in. The equilibrium is right here. So we're at the bottom of this channel, which also coincides with the sweet spot. So still bullish. We could have a peak below to this level here. Stop loss hunt. This could be where Trump opens up about something and we have a run to 50 pips. But we could most certainly come down here, and that would be a change in behavior. So little iffy on what kind of trades we take. You can certainly adjust this channel here to get it more perfect, but you get the idea. Bounce, 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 bounce. So we could have the bounce here. I want a new high, so the previous high is here, so I want a new high above that before I go back up. So that's on 1 hour. Consolidation, breakout from consolidation. So we have a breakout from consolidation, we had a revisit here, but we could have another revisit here and then it could go shorter. So let's see what happens here. So we just put a little right here. And let's see what happens at that level. Either we'll go short here or we'll go long. So right now, since I'm sitting about roughly $11 in risk, I'm not taking another trade. I'm going to stick to the rules. And I'm going to go ahead and pause here, and I'll be back when things change. I'm trying to make these videos shorter, but it's hard because I'm trying to teach you guys a lot of things. But as these standard indicators comes on, as you can see, I don't have them here, so I'm going to fix this chart. And then we all have the same structure. You kind of understand how I'm trading. Now you learned about the trading channels today. You learned about the indicators today. that we're using, these two indicators, and we have the support and resistance stuff going on. So we're pretty much set. So hopefully tomorrow will be a lot shorter. And again, today I'm going to try to turn on a live session. If I can figure it out. If it doesn't happen today, it most definitely happens tomorrow, January 9th, and that might be better because it's hard for people to just jump on here now. So, and we're already at 9 o'clock, and we have like 3 more hours of volatility, and then the market kind of dies after lunch. So, all right, I see you in a little bit. All right, we're back. I added another shirt because I got bored. So I added dollar Canadian, and I did the same thing here. I put the indicators on, as you can see, the trading zones, and then I drew myself a little channel after I'd done the support lines. I also took a look here where we at. So we have bottom, bottom, bottom. This bottom and that bottom, well respected. This one tested a little bit further. This bottom here, which is January 2019. This one was October. This one was in the middle of July. Another area here. So pretty darn strong resistance and support area. So which would indicate a bottom as well. And then we have the trading range for this is from here to here. So if we drew a box, the trading range would look something like this. So that's our trading range. Now if we zoom in a little bit, we can see our trading range is 345 pips to play with. And what I call trading range gives me an indication of an area where I can expect price to move inside of. And this probably needs to be furnished up a little bit here. I'm trying to see. There's a reason why I'm not going up here. So the reason is you have a breakout, and you can have a breakout of a trading range, but you look at resistance, 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 support, 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 resistance. So it's a very strong area. When it breaks outside, I would be looking for a trade to go up here. So I look at previous support. So it broke outside the box, came back to previous support, then went back up. This doesn't look like a big move, but check this out. It's 123 pips. So it's substantial. So the trading range gives you an indication, like if you're at the bottom, where we're at right now, and we should extend this a little bit just to make sure we have the bottom there. Not that one. So whenever you get to the bottom, and the real bottom is, yeah. Let's see. What do we have here? I'm not liking that bottom. I'll move it up a little bit. Let's find one that really does make sense. Put it right here. So when you're at the bottom or at the top, look for a setup. Now remember the equilibrium we talked about, where price seems to like to come back. It's always around 50% fib. Take a look at this one. Right there, fib. Resistance, support, resistance, support, support, resistance, support. So it's area where the price likes to come back to. So when it's there, look for a setup. I do. All right, so I'm at the bottom, so I'm kind of bullish on this, which would be consistent with everything else I'm doing right now for US, for the dollar. So I'm bullish on this one. On the daily, also here we have a break above pivot, pivot being here on 4 hours, working our way down. Right here, we broke this pivot, previous structure, broke above, came back to support and went back up. Reasonable to believe we're coming back to this support and then potentially up to the top of the trading channel, which is about 60 pips. So not a bad setup. So with that, I'm starting to eyeball for a setup. So we have the support here, resistance, 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 resistance. So pretty strong one. So let's see if we can't identify a trade. So one of the things you can do, one thing you don't want to do is chase price, because that's where you get burned. Like, so you're afraid of missing out and you start just chasing. I gotta take the trade now. I gotta take it now. Wrong. You can set where you think the trade's going to come to, and then let it come here. So let's say the support is where we want the trade to kick in. So we'll right click here and we'll set a buy limit. So this trade is sitting down here. It's green because it's within 10 pips of the current price action. We may miss this. We're going to play this one out. We're going to leave this one alone. Or it may come down and take it and fart right up. That would be excellent. The thing when you set a buy limit is that you can't grab a hold of this thing and pull down your stop loss because it's not an active trade yet. So you have to set the stop loss. You do that by double clicking here, stop loss or take profit. So our buy price, limited buy price is at 30.07. So it's a major, almost a major area. 1.30 is market mover level, so price seems to come down there and then take off. They like that area. Here's your tick chart. So we want, let's say we want to go below previous low. We're on 5 minutes right now, so that's 34 pips. So 34 pips backwards from this would be 1 dot minus 30 pips, so 30 minus, so let's say it's 100 minus 30, right? So it's 29, 30 pips down from 30, we're putting you at 70, 34, put you at 66, so 66, 4, modify. Here's my stop. So let's see if my math worked out. This is a little bit more than I bargained for. So my buy limit is right here. So I'm at 41. Now I set it. I can move it up. 39. I don't know what I was thinking, but anyway, I'm going to set it right below here. So now my stop loss is set. Set it and forget it kind of thing. Old commercial. Stick the thing in the oven and set it and forget it. All right, so we may not get this trade, but anyway, we've set it. We could set the TP level as well if we wanted to double click here. Let's say we have a 30 pip stop loss, so we want a 60 pip profit. So that puts us at 130.60 plus the spread. The spread is 0.8, so we do. Let's do 8. Modify. I have to swing out here. Hold it over. Says 60.3 pips from buy, which is down here. It's actually from 130, right? We're buying at 130.07, so we can adjust this up a little bit. right there, consolidation area. So this one is set. Let's see if we get it. Anyway, that's going to be it for today. Please hit the like button. Please hit the subscribe. Turn on notification. There's a little bell. I'll make some fancy little intro to that or something. Still learning. And tomorrow we'll do a live trading session. And I do apologize about the videos being so long, but I'm trying to teach you guys what I do. You may not agree to how I trade. That's perfectly fine. You can trade any way you want to. I'm still trading after many, many years. I'm still making money, so obviously something is working. Don't get frustrated at taking losses. Learn how to take losses. Don't look back, say, I should have done. Yeah, you should have done a lot of things. But learn how to take your losses, control your risk, and you'll be fine and you'll live another day. All right, so I see you tomorrow. And I'm going to hit the F10 here.